The cold storage market was worth an estimated $107 billion in 2020. The Asia-Pacific is a growing part of that market, with anticipated annual growth of over 10%. But that growth is from a low base, with even the region's most advanced economies trailing behind Western countries.
During the pandemic, we definitely saw as the supply not being sufficient for cold storage. And that supply was, especially in markets like in Southeast Asia, has been quite old.
There's currently limited supply in the market, right? Because most of these cold stores, right, they tend to be owned by their end users or by third-party logistics players, investors like your REITs or your funds. These are quite relatively small. So the pandemic has affected construction activities. So new supply is also taking a while to come into the market.
In Singapore, cold storage warehouses account for just 10% of the stock of Grade A warehouse space, according to Colliers. But while investors might see opportunities in limited supply and increased demand, industry experts caution that there are also risks.
Kind of equipment you need, right? Capital expenditure is higher, right? And also because of the power consumption, operating expenses is also higher. So definitely, in terms of investment, it's more risky compared to a conventional warehouse. But of course, with high risk, there's high returns. Rents can be about 50 to 100% higher as what you see compared to a conventional warehouse.
Cold storage was so niche before COVID-19, and I think we did an investment intention survey early this year. Surprisingly, cold storage is ranked as the second most preferred alternative real estate for investors to deploy the capital, just right next to the data center. And then the feature of cold storage is they tend to be a longer lease term, in average 10+ year leases. As a result, the stable income is what investors are looking for.
Before the pandemic, trends in the food industry were already driving the growth of the cold storage market.
One, as population grows, food consumption will also increase, and with the high proportion of food imports, this will always drive demand for cold storage. The second one is also consumers are demanding higher quality foods and demanding more fresh producers and perishable foods, such as fresh meat and vegetables. So if this shift, you need a lot of this more capacity for cold storage to keep these producers fresh.
Last year, we saw the supermarket online shopping in Singapore. It was only 7.7%. Because of COVID, I think over the past 12 months, the online food shopping has increased to 12.5% in Singapore. That drives the additional demand for cold storages. The second one is all about the need for omni-channels distributions for food and grocery platform. I think that has happened well before COVID-19.
Since late 2020, cold chain has played a vital role in the rollout of one of the most sought-after international commodities, COVID-19 vaccines. But despite this, experts think that the growth of cold storage facilities will still be driven by long-term trends in the food industry.
I think the bulk of demand still comes from the F&B. In terms of vaccine, I think it's still a relatively small portion of the entire market. And also because given the ongoing vaccination drive, when vaccines are imported in, they are quickly distributed out to the population. So in terms of storage-wise, it's not such a big market.
In fact, what we are seeing is the rise of Asia-Pacific life sciences. Is going to give us the extra boost for the super high quality of cold storages in the coming years. It's not only for vaccine only, it also covers for wider medical products. So pandemic is the catalyst for us to develop more good quality of cold storage.
Currently, rental prices for cold storage facilities are higher than normal warehouse facilities. But despite these premiums, experts we spoke to think asking prices can go higher. Currently in Singapore, rents for cold store logistics warehouses range between $2.50 to $3.50 per square foot per month.
I think it's a good time. Definitely, we're not late cycle. The other asset classes, like hotel and retail, so investors are moving out of those, and definitely the yields in logistics are better. So I don't see I don't see any roadblock really for investors to go into that.
In Singapore, estimated cap rates have certainly compressed. Right, in the past, cap rates were about mid 7%. Right now, I think we're reaching around the mid 6 to lower 6%. Yeah, so capital values have certainly appreciated.
Cold storage construction is projected to reach 18.6 billion US dollars in value by 2027, according to consulting firm Emergen Research. But market watchers are expecting demand to continue to outstrip supply.
It's a long way to go. I think when we are looking at the demand for the cold storage facilities after COVID-19, when lives are back to normal, I think two structural changes will continue to be here to stay. Number one, what we are expecting to see is the habit of online shopping for food will be here to stay for sure. The second one is all about e-commerce. So I do believe we have a long runway to go, particularly for cold storage investment.